Where there's mystery, there's margin. And the inverse of that is true too. Where there's no mystery, there's no margin.
Yeah.
So as the internet has made data sets widely available, right, to your point, it's democratized pricing.
What would you advise to someone who's kind of looking to start getting into the angel game? I know there's such a huge community and these people are not trained at all. They're kind of going out and trying to figure it out on their own. What would be advice towards like a first-time investor?
Yeah, I mean, the Angel Capital Association, the ACA, is a great forum for you to learn more about being an investor. I think some of the areas we see that are a huge challenge early on in investors is you need to follow somebody who's actually a lead investor. And I think this is where angel investors get a bad rap, is they pretend to be lead investors, but they're really tire kickers, and they're waiting for somebody else to lead the investment. So I think it's okay. Like in Seattle, we have the Seattle Angel Conference, which is a forum that's set up for for potential investors to consider angel investing. And the process is super arduous for the founders, right? Because this process isn't really about the founders. The process is about gearing up and building the next generation of angel investors. So consequently, it feels like they're doing Series B level due diligence on a Series C level deal. And it frustrates founders until they realize, oh, well, this is actually a program designed to train angels, right? I'm just the product that they're showing off. And the answer is yes, you've got it. You are now they still write checks, right? But they're early angel investors trying to learn their way through it. Because there's a lot of our own lingo in this whole thing of like, oh, is it a Series Seed 1 or a Series Seed 3? Is it a participating preferred or is it a safe? And it's like all that stuff that I live with every day from a restructuring perspective or having to do a fundraising round. But if you're new to it, it's not like buying Amazon stock.
Yeah.
Right? Which is liquid today and I can trade it after hours. And because when I jump into an angel deal, I'm going to be in that deal 7 to 10 years. Like, so I really need to like you as the founder. I need to love the business. I should be able to explain it to my spouse because they're going to be part of that decision-making process.
Yeah.
Right. So I think just find an organization or find somebody in your community who's already doing angel investing and tag along. Happy to have you. Like, love new angel investors. They're awesome. Every once in a while, you'll see some weird terms or something, and it's like they basically have made the deal unfundable in the future. Because if I come in along as an institutional investor, I ran a family office fund for 3 years, super high net worth individual, and then worked at a venture fund, a couple of different venture funds. We'd come across these deals and we're like, you got to fix that. Like whatever that angel did, like structure that deal, like we won't invest in that.
Yeah.
So now you have to fix it and pay for the legal fees to fix it. So it's best to figure out, like, the ACA has docs, there's standard docs, like they're super vanilla. There's a thing called Series Seed docs, which Cooley Goddard wrote with, I think, Wilson Sonsini. They're available on GitHub, like they're open sourced documents.
Yeah, Cooley Go as well is like basically they host them all there. You can actually go in there and type in your own stuff. So yeah, that's another thing, right? People spend so much money on legal documentation when you just have great templates out there.
Angel stage check for 25 or 50 grand. I don't want $6,000 of it to go to legal or 10 grand.
Yeah. And what you described is the classic example of someone who doesn't have experience investing, because if they did, they would understand that they have to make the deal investable in the future. It's in their interest to grow the valuation of the company for their own sort of, investment multipliers. So that's clearly, And the classic example I think one of the first questions I guess when investors are like considering investing and they don't know about the tech world, they're like, no, but what's the valuation? What's the exact valuation? What do you mean there's no valuation? When you talk about safe notes or like convertible notes, it's like they can't wrap their head around that because they've been part of a world where it's like all about like, the free cash flow sort of methodology of finding out valuation.
Net present value calculation on future cash flows. There's actually Dave Berkus wrote a methodology 20 years ago called the Berkus method, Berkus. And I've been a closet fanboy of Dave for years. And I actually reached out to him because I quoted him a couple times in the book. And I reached out to him and said, hey, you don't know me, but I'm a total fanboy lurker, right? Like, could I send you the book and would you write a blurb on the book? And because I've quoted you in these two places, and like one of my mentors early in my career quoted, which I didn't know at the time was Burkus, was like, where there's mystery, there's margin. And the inverse of that is true too. Where there's no mystery, there's no margin.
Yeah.
So as the internet has made data sets widely available, right, to your point, it's democratized pricing, right? So that's been a great thing for our community. But in emerging markets, we see a lot more marketplaces because that's still pretty opaque data sets. But what Dave did in the Burkus method was he basically said, is it a good idea? That's kind of worth, 300K. Do you have a whole team? That's kind of worth 250K. So he basically, created this method where it's like, they're all heuristics, to your point. It's not math from a valuation perspective. There's a set of heuristics, and I would call it a little bit like a soccer pitch. You can either be on the field and in the sidelines and the end zones, or you can be up in the fans, in the seats, right, with completely unrealistic numbers, or you can be out in the street, right? And what happens on the angel investing side is we have a monthly angel call that we do with early stage VCs, and people are like, oh yeah, I saw Christian's deal. I thought it was overpriced. So now every angel in Seattle goes, oh yeah, Christian's deal. When I see it, I know it's overpriced. And it's all because the founder went out and said, we think we're worth $10 million. And you're like, why? Right? And it's like, because we're testing pricing. It's like, that's a bad place to test pricing, right? So, founders talk about angel investors amongst the founders. Angel investors talk about founders amongst the angels. Like, we're all looking for signal to noise. And I think that's just part of the process. And it's part of why you have to work on, being out in the community and engaging and building relationships, and versus like sitting at your home on your keyboard and building product. The answer is, yeah, the building, go talk to customers. Right.
And then to your point, like, understand the other people who are sitting on the other sides of the table of you, whether those are customers. Of course, that's the first thing you're going to do when building your startup, but also the investors, also the strategic partners, like, understand their point of view. So it's easier for you to fit in within their model, or just to be like, you know what, maybe that's not for me.